Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we had a 3-day weekend where the stock market was closed, but that didn't mean we weren't going to have action. The S&P futures were open a partial day on Monday, even with the stock market closed, and we saw the futures rallying sharply higher after Trump walked back his tariff threat on the EU countries, right? So basically Friday, the markets had sold off. He had threatened to impose a 50% tariff by June 1st. Instead, over the weekend on Sunday, he said he's going to go back to the original July 9th, which was that 90-day period that he had given from when he pulled back on the tariffs last time. So the markets were down on Friday, and then the futures took off on Sunday night into Monday and have continued generally to stay pretty strong going into today. We are seeing a little bit of a fade, but either way, we will be opening up on the S&P 500 over 1% higher. Now, the big question from a technical point of view, is this a bull flag that's going to break out and send us to the all-time highs, or is it going to ultimately fail and see this market coming down sharply? So let's flip over to the charts and take a look. And if we look at the S&P futures, this is really what we saw here, right? So again, if we look at the rally going up, you can see the market's just continuing up. We have faded a little bit from those highs. In fact, at this point, we were up significantly on the S&P. We've dropped about 20 points from that level on the futures here. As you can see, again, a lot of sideways to lower chop. Now, we did get durable goods orders out this morning. Durable goods came in slightly better than expected, but still not great. But again, better than expected. The markets, for the most part, didn't react to that number in particular, more so to some other factors out there. We did get comments from Neil Kashkari, who's one of the Fed presidents, and he did talk about how the Fed needs to stay on the sidelines because of tariffs and uncertainty until the Fed gets better viewership or an idea of where inflation is going. So again, it still seems like the Fed is on pause here, unlikely to cut rates at their next meeting, even though the markets would love them to do so. All right, again, couple things to go over here. If we flip back to the charts, let's take a look at the daily chart here. This was that daily zone of resistance on the S&P, right in this lower zone here. You can see these low pivots. They kept on hammering, and then finally broke down. We came right into that level and saw the rejection. Now, again, in general, bull flags, you want to see as close to a right angle as possible. This is not close to a right angle, but still, it's still inside of this upper move, right? So again, if we look at this bigger rally on the daily chart of the S&P futures here, the S&P essentially up, a pullback, and now it looks like we're trying to retest this zone. If it punches through this zone, in essence, you'd have to be on this in the side of thinking that we would at least go to double top back to the all-time highs up here. All right, so again, just something to kind of keep an eye on this zone here. Basically, watch the 6,000 level on the S&P. If we break above 6,000, I would say we at least go to double top and probably at least pierce the all-time highs. If we can't get above 6,000, that even number could continue to signal that there's that potential for a breakdown in the markets. Looking at the 10-year yield is pulling back for the third consecutive day here. Again, we've had this monster move up here and then a little bit of a pullback. Believe it or not, there's even a chance we could pull back to the scene of the crime here, right? So we went up and broke out here. We went up here, then we pulled back and kind of chopped. We retraced into that level before the recent move. It's always a possibility we could come back here before that next leg up. I still have an ultimate upside target, though, of around 4.74 on the 10-year before we see a more sustained longer-term pullback. So even if we pulled back to this level, this would be a short-term pullback, and I would expect one more move to the upside. And again, you could say, well, what is that upside? Why do yields go up? Well, there's two probabilities, or two possibilities, I should say. One would be that growth in the U.S. economy starts picking up a little bit. We did see durable goods slightly better, but you don't know if that's tariff related or not. But the two consecutive, or the two caveats to higher yields, one would be better growth, which means interest rates have to go up because inflation could be popping up a little bit. Or the other one could be a lack of trust in the U.S. financial system by others out there, and a reluctance to buy treasury yields. And we did see that 20-year bond auction last week coming in much, much weaker than expected, and that did push yields up. So again, there's always a chance that that could be the culprit instead of stronger growth in the economy. All right. Couple other things here. Let's quickly dip into the US dollar, and then we'll get into individual stocks. The DXY today, small bounce. Notice it's been in a downtrend for the last 2 weeks, so getting a small reprieve here. For the most part, what type of pattern is this? For those of you that are pattern buffs like me, you can basically see we had this bigger, longer-term macro move down, and now we're just chopping inside here. And again, if we just play this out or game this out, as I always like to do with you guys, let's just say we continue to hold inside of this pattern. We do something like this. Ultimately, what do we expect to eventually happen? An eventual breakdown, right? This would be the flagpole, and this would be your bear flag formation, and eventually that could lead to further downside in the US dollar. And that's what I do anticipate. The dollar eventually goes lower. Now, the one caveat could be is, can that fail? Meaning, can the bearish side fail and the bullish side of the dollar take over? The answer is yes. To do that, what would we have to see? We would have to see a break above this level, right? So if we broke up here and we recaptured this zone here, this trend line, and then we started to consolidate there, that could then be bullish consolidation, right? For an eventual breakout to the upside. But you don't go on that assumption. This is one of the big issues that most investors have. They always have, and this is just normal human behavior, is we have preconceived notions of what we think should happen. And that jades us into believing that something is going to happen. In other words, the one thing we want to do as traders is throw out all preconceived notions and just say, hey, this chart should tell me. I shouldn't be predisposed to thinking the chart's going to do something. The chart pattern is what we look for. And the key here is just saying to yourself, okay, well, as long as we remain here below this line, then this is bearish, right? When it breaks down is another story. We don't necessarily know that. But as long as we stay below this trend line, the bias is bearish. If we confirm above the trend line, okay, well, guess what? Throw out that bearish bias and bring it up into a more bullish or neutral bias at that point. And again, the idea is that, even when we're in a trade, right, we could be in a trade and it could be looking like it's going to go in our favor. And then all of a sudden it makes a move we don't anticipate. And for most of us, myself included, it's very hard to admit and say, oh, things have now changed and I'm out of the money. But to admit that is very important. And it's something that I work on nonstop, folks, because it's even hard for me to say, okay, well, the chart has now changed. I might have been short that position, but now the probabilities are favoring the upside. Now you have two options. One is to dollar cost average if you don't have a full position and maneuver to being able to be in the money, or you just cut it and reset. And again, either one's okay as long as you can prove to yourself that you can do it profitably. But what you don't want to do is just say, nope, even though this chart is now moving back to all-time highs or going above and making breakouts, I'm going to stay with my short no matter what. I've made that mistake in trading, and listen, it is a tough lesson to learn. And for me, I've been someone who I don't really learn things the first time. I don't know if any of you guys are like me, but sometimes I got to learn it the hard way, like 4 or 5 or many, many times. And so it's something that I continue to work on to this day, but it's a lesson that I hope I can convey to you guys to improve yourself without having to make as many mistakes in trading as I did before I achieved the level that I'm at now. And just to be clear, I still make mistakes to this very day, and I'll still make mistakes for the next 10, 20 years of trading. But it's the idea is to make them less and less. All right, into the Nvidia chart here. Nvidia is trading up. The reason why I bring up Nvidia today is because this one reports earnings after the bell tomorrow. Now, there's a couple things here that I'm keeping an eye on. Number one, you could make a case that we're at a point where we are making potentially bullish consolidation. Now, a lot of us would look at this and say, this is a great bullish consolidation pattern. I'm not quite in that camp, and I'm going to tell you why. Okay? The reason this isn't as good, and listen, it is still bullish consolidation, but there are degrees, and this is a great lesson for the day. Patterns have degrees of positivity or success. So you could have a bull flag like there is on Nvidia, and it is favoring upside, right? It favors, let's say, this one, it's not the greatest. It would favor upside for me, maybe 55-45. So just slightly better than half or 50%. Now, there could be another bull flag that you look at and you say, okay, this bull flag favors upside 80% success rate. Now you would say, okay, well, both patterns, let's just say both patterns are identical. Okay, both patterns identical. So how do you know which one is the better consolidation pattern? I'm going to show you right now. Okay, so the key here is if we go back to the charts and we look at this chart, this consolidation bull flag is because if we look at the daily chart of the S&P, it's been making that same pattern. So the idea is this, guys. If you have, and I'm going to draw this out, if you have a move up in a chart and it's mirroring the S&P, what does that mean? It means that basically the S&P is controlling it, or there's some coordination between the two charts. Now imagine if you had a pattern formation where there was a sharp down move, like right here, there was a sharp down move in the market. Imagine during that pattern, during that period, you had an up move on a stock and a bull flag. To me, that's much more powerful because you have the pattern holding sideways while the market is correcting or over here. Or better yet, imagine the market was going up, but the stock you're watching is putting in a bear flag. All right, so a sharp rally in the markets like this rally here, but you're putting in a bear flag. Those things are more important. So in other words, if the chart pattern matches the S&P, it doesn't carry as much weight as if the S&P is doing something arbitrary, meaning let's say it's collapsing, but your chart is putting in a beautiful sideways consolidation pattern. That tells you there is relative strength within your chart that you're watching. The probabilities of that pattern playing out are much higher. So listen, it's not to poo-poo on anything that Nvidia is doing, right? So it's still saying Nvidia has an inside bar pattern and probably favors the upside, but it doesn't favor it as much because the S&P has been doing the exact same thing. All right. Next up, taking a look at Pinduoduo or PDD. This stock is getting hammered on earnings, down almost 20%. It has bounced a little bit off of its lows here in the pre-market, but basically they reported earnings this morning and they missed on earnings. And remember, this is directly what Trump's tariffs are going to be hitting, right? Pinduoduo, I think they have Temu and some of these others. They're basically online retail, stuff like that sells here in the U.S. And essentially that's what's going to happen here is they're going to take a hit. So the stock is down sharply. Is there a day tradable level on this? I have my line so we can see where it's trading. I will be watching here, and this was already down to this level pre-market. So for me, I'm going to be watching the 90-ish level here and the double bottom at around 88. So somewhere in this vicinity, I'll be looking for a potential day trade long if it dumps here during market hours. Right now, again, it got as low as around 94 and change. It's bounced back to about 98. And again, if it were to flush back down into this zone here, that would be a potential day trade. Here's an interesting one, Palantir. So Palantir is only up a little bit on the day, but what's interesting about Palantir is it's really running into a lot of resistance. You have this long-term trend line going back to 2021. That's what kind of put in this short-term top. But then we also can take this high and connect it to this high, and it gives us a level. So for me, if I'm going to look for this on the downside, I would need to see it get to about 135. Now, why is this stock remaining so strong when analysts have literally downgraded the price target to like 40? And the answer is very simple, right? Is that essentially what we have here? The hype is intense in the retail sector on Palantir. It's one of the most beloved stocks. And the idea is they have the Golden Dome may be beneficial to them. So again, that basically missile defense system that Trump is proposing that's going to be built around the US, they might be influential in that. So again, that's really keeping the buzz high on Palantir. But for me, this level up here, and look at this, guys. To me, this is getting very close to a parallel trend line. And that also would be very interesting to kind of monitor to see if that parallel would align and then give us a shortable level up on that. URA, we got to talk about uranium stocks. Uranium stocks are hot again. Look at that move on Friday. Big rally to the upside, piercing this little pivot high here. This morning, it is trading up here. However, this is now getting into a shortable level. This looks like a very high percentage zone right up here, right around 34, 33 to 34, 33.50 maybe. But again, this type of movement, it was already overbought. Look at the grind up, grind, and then blow off top is what looks like's going on here. Now, listen, I want to be clear on this. Uranium stocks, there probably is further upside down the line. So remember, I'm a shorter term trader. I'm not a long term. I'm not telling you basically, oh, uranium's done for the next 10 years. No, we're looking at a very short window here of basically the next 1 week to maybe 1 month out. And based on that, to me, URA and some of these uranium stocks are getting very short-term extended. You can look at the RSI now at like 86 on the daily. All of these metrics and the extended blow off top here are telling me that we're getting close to a significant pullback. And when I say significant, 10 to 15%, in a short order, like within a couple days type move, maybe within a week or so of a retrace. Okay, so just keep that in mind, is that looking at this area here, right up here, to this little pivot top right up here, this again, grinding, blow off top, higher volume, gap up today, possible top being put in. I, again, will be really eyeing this more and more so on a heavily day tradable as well as in a swing trade short here on the chart. So just keep an eye on this, guys. I do think that this is a very, very interesting opportunity for a pullback short term in the uranium stocks. Bitcoin today is pushing up, guys. We know that Bitcoin still has not achieved my key level that I'm watching for. Right around 113 to 114. And remember, that line comes from the 2017 high pivot through the 2021 first high to the exact high here, to the exact highs right here. So in other words, if we were to rally up into that, all I'm doing is connecting dots essentially, and noticing that every time we hit that line, we tend to pull back. And so my logic, the logic side of my brain says, even though there's so much hype out there, until proven otherwise, I have to assume Bitcoin could pull back off of this level. Gold today, we talked about Friday moving up into that key level right there. And today we're seeing gold pulling back. That makes a lot of sense. Pivot high, dictated a pullback. Remember, this is most likely a bullish consolidation pattern, which eventually will break out as long as this zone holds. You want to see this 3,100 area hold on gold. As long as price stays in here, eventually I would anticipate a breakout. Silver under a little bit of pressure today. It is still staying above this down-sloping trend line here, so it remains bullish, but we are seeing silver under a little pressure today. And then if we look at oil and nat gas, oil just continues to chop sideways. Really no significant move since this latest run up here, just a lot of sideways chop. Overall, the bigger pattern is bearish, but it doesn't mean in the short term it can't pop here before that bigger leg to the downside. And then lastly, natural gas. Let's take a look at that. If we look at that, same thing on natural gas, still stuck between resistance and technical support right down here, and just doing a lot of sideways chop in the meantime. All right, guys. So listen, keep an eye on Pinduoduo. I want to follow Bitcoin. We're going to watch the S&P as it tries to rally up, or does it give back some of these gains? One thing I'll mention here is it's becoming clearer and clearer to me, and if it's becoming clearer and clearer to me, then probably to big institutions, that there still is some sort of Trump put on the S&P. And what is a Trump put? Trump put, it means that when the markets get in a nasty scenario, Trump tends to back off pretty quickly from his tariff threats. And we saw that again. And so the markets are going to take his threats less and less seriously unless he imposes these type of things. All right, so keep that in mind. And we saw, I mean, think about how fast he kind of backed off on the European Union 50% threat. It came out on Friday, and then by Sunday, he was already backing off. We saw what happened with the first round of European and other tariffs, where yields popped dramatically and he backed off, right? We saw China reduced with the US, the tariffs, they've come back in. And so this is something that the market is going to slowly adapt to, and meaning that his threats will probably cause less and less of a sell-off. The problem will become if the economy starts to really nosedive. And we'll get the jobs data. I think next week, the jobs data will come out. We get PCE data this Friday. That's inflation data. I think the economic data is going to become more and more important for this market. All right, you guys have a great day. I got to get to my trading room. Have a good one. I'll see you soon. Take care.